welcome back on Market Headlines. The performance of the Indonesian manufacturing industry accelerated in March 2021. It can be seen from Indonesia's manufacturing PMI in March was at 53.2, or the highest level in the last 10 years. The performance of the Indonesian manufacturing industry accelerated in March 2021. IHS Markit noted Indonesia's Manufacturing Purchasing Managers Index in March 2021 was 53.2, up from 50.9 in February. In its official statement, IHS Markit said the position of the Indonesian manufacturing PMI in March was the highest in the last decade, surpassed the peak of the previous survey seen in June 2014 and July 2014. The sector's record of improvement is driven by growth in new demand and production. Both also recorded their highest performance since the last decade. Production was recorded to have increased for 5 consecutive months. This is in line with the increase in the volume of new orders. Unfortunately, new demand is only strong domestically because the COVID-19 pandemic is still affecting the export business. Regarding this, Minister of Industry Agus Gumiwang Kartasasmita said that this was the result of the efforts of industry players, while at the same time the government was all out to support industry players. Evidently, for 5 consecutive months, the Indonesian PMI has shown expansion. IDX Channel team reported. Yes, viewers, of course, the increase in Indonesia's PMI manufacturing is promising amidst the massive economic recovery efforts being undertaken. But is it enough just by increasing PMI, or are there still other challenges? Let's just review it in the following graphics. We're going to the first graphic, the data of Indonesia's PMI manufacturing. We can see that from July, Indonesia's manufacturing PMI at 46.9, and then on August, 50.8, and September 47.2, October 47.8, and then starting on November, the PMI manufacturing index was at the aggressive level 50.6, and then continued to 51.3 at December, and then January 21 we can see 52.2 and experience a decline on February 21 on 50.9, but in March, it was a big surprise that the Indonesia's Manufacturing Purchasing Manager Index was at the level of 53.2, or the highest level in the last 10 years. The Indonesian Manufacturing PMI in March 2021 was the highest level in the last 10 years, which surpassed the peak of the index in June and July 2014. Based on this data, the Minister of Industry, Agus Gumiwang, said that the Indonesian Manufacturing PMI was at an aggressive point. And we can see that IHS Director of Economics Market, Andrew Harker, there are 3 important points related to the significant increase in Indonesia's PMI in March 2021. The first one is the sharpest increase in output and new orders during the survey in a decade. And the second one is stable employment. And the third one, the fastest increase in input costs since October 2018. With a positive PMI manufacturing figure, how is Indonesia's PMI position compared to other Southeast Asian countries? Let's see the data in the next graphic. We can see the Southeast Asian countries' manufacturing PMI at March 2021. We can see on the first place, there's Vietnam with 53.6, and on the second place, Indonesia with 53.2, then Philippines 52.2, Singapore on the 4th place, 50.7, while Malaysia got the 5th place, 49.9, and then Thailand 48.8, and Myanmar far away at 27.5. The data is taken from IHS Markit. So in the Asian region, Indonesia has had the best performance over the past 5 months. It is hoped that this can encourage economic growth in the first quarter of 2021. Moreover, the government has provided various stimuli so that the manufacturing sector will rapidly expand and continue to show positive growth. One of them is through a fiscal incentive in the form of a reduction in the sales tax rate on luxury goods for cars, where the government has provided relaxation from March 1 to December 2021 for four-wheel vehicles with engine capacities of up to 1,500 cc. The policy was also extended to vehicles with an engine capacity to 2,500 cc starting April 1st. Meanwhile, amid signs of economic recovery, one challenge has emerged from the side of inflation and weakening purchasing power. And let's check it out on the next graphic. We can see the data of Consumer Price Index month on month in Indonesia. In the last year, on July, we experienced a deflation. On August, deflation. On September, also deflation. While on October, November, and December, we can see the Consumer Price Index recorded inflation 0.07%, 0.28%, and 0.45%. Meanwhile, in the first 3 months in 2021, on January, the inflation was going down to 0.26% and continue to even a lower level at 0.1% on February 2021. While in the last month, on March 2021, the inflation was even lower at 0.08%. So inflation in March still tends to be in line with the projections issued by a number of economists, including Bima Yudhistira, who predicted inflation of around 0.09% to 0.11% month-on-month and 1.35% on an annual basis. Bima said that one of the factors for the low rate of inflation was that the demand side tended to slow down as people's movement had not yet recovered. Meantime, Joshua Pardede, economist of Bank Permata, say that in general, the slowdown in inflation since the beginning of this year is more or less due to the implementation of PPKM. This policy certainly affects people's mobility. This consistent decline in inflation shows that people's purchasing power is still limited. So which cities and sectors contributed to the realization of inflation in March 2021? The data is in the next graphic. We take a look at the data. So this is Indonesia's Consumer Price Index, March 2021. The monitored cities, inflation, the highest one occurred in Jayapura with 1.07% inflation, the lowest in Tangerang and Banjarmasin with 0.01% inflation, while the deflation occurred in Bau-Bau as the highest with 0.99% and the lowest one in Palopo with 0.01%, while the deflation contributor red chili and rice, and then transportation, personal care and other services, and then gold jewelry. The groups contributing to inflation included food and beverage and tobacco, then the clothing and footwear group, the housing, water, electricity, and household fuel group. BPS data also shows that based on its constituent components in the same period, inflation was mostly caused by the volatile price component of 0.56% and the government-regulated price of 0.02%. On the other hand, the core inflation component is in fact deflation of 0.03%. The inflation rate in the first 3 months will more or less reflect the performance of household consumption in the components of economic growth in the first quarter of this year. And hopefully the efforts for economic recovery will continue in synergy among all stakeholders. So stay tuned on us. Market Headlines will be right back after this quick break.